Welcome back to Investing Talk Podcast. Today we're taking a look at Snap. It's definitely a volatile one in the social media and mobile messaging space, and we're trying to answer that really critical question. Is Snap stock a good buy right now? We've gathered the technicals, analysts' views, recent financials, really trying to understand this balance between their, cool product innovation and this ongoing struggle they seem to have with profitability. So as we get into it, please do subscribe, like the show, leave a comment. We genuinely read them. And yeah, if there's a company you'd like us to analyze next time, just let us know in the comments below.
It's a really interesting one to break down. Based on, well, all the material we looked at, Snap's got this overall rating of just 4 out of 10. And you can see why. There's this stark contrast, right? On one side, you've got strong user growth, some really compelling near AR stuff happening. But then the other side, persistent profitability problems, big ones, and honestly, just crippling competition. So our job today is to figure out which side of that scale weighs more for you, the investor, thinking about the near term.
Okay, let's start with that recent momentum then. Because you're right, if you only look at the product side, maybe the last 3 months or so, Snap actually looks like they're making some smart moves. The innovation part feels strong. Like back in July 2025, they boosted their machine learning ad system. And apparently that paid off pretty quick. They got, what was it, a 30% conversion lift for app install ads on Apple devices?
Yeah, 30% lift. That's not small potatoes, especially, considering all the headaches the industry's had with Apple's privacy changes. It shows they can adapt their tech.
Right. Adaptability is key there.
And it wasn't just the ad tech. Their subscription service, Snapchat Plus All, that seems to be really hitting its stride too. The user numbers surged, almost 15 million subscribers now. That's up 59% from the year before. Huge growth.
59%? Wow. And the revenue from that?
That jumped 75%, hit $152 million, which, if you annualize it, gives you a kind of visibility on like $600 million in recurring revenue. So, it's starting to feel like a genuine way for them to diversify away from just relying on ads, which are so cyclical.
Okay, so the product story sounds great. Ad tech improving, subs booming, which makes it even more confusing when you look at the Q2 earnings from August. Why such a mixed bag then?
That's exactly the tension, yeah. If you look at the sort of operational scorecard for Q2, the positives were definitely there. Daily active users, the DAUs, they climbed 9% to 469 million. So still growing users.
Okay.
Revenue also grew 9%, up to $1.35 billion. And they even managed positive adjusted EBITDA around $41 million. So operationally, things look, well, functional.
There's always a but with Snap, it feels like.
Yeah. The bottom line problem, despite all that progress on users and revenue, the net losses actually widened to $263 million. And the market sees that number, that recurring loss, and all the old worries about profitability just, bubble right back up.
Makes you wonder if the product wins are just sort of papering over the cracks, financially speaking.
Exactly. Are these wins just paying for past issues or building a real future? That's the question.
And you saw that confusion play out in September, right? They launched the new spectacles, the 5th gen, plus SnapOS 2.0. And that AR story is so strong, the stock actually jumped, 6.6% in pre-market trading initially? Investors clearly still want to believe in that AR future.
They do. They really do. But that belief, it's very fragmented. It's fascinating when you look at the analyst views around this. Our sources show these huge divergences in valuation. Some analysts see it worth maybe $8.23 a share. Others are way up at $18.82.
It's a massive range, over double.
Huge. And that gap tells you everything about the uncertainty. Are people valuing the sort of long-term dream of AR, or are they focused on the here and now? The profitability struggles, the legal risks like that class action suit over ad revenue reporting, it's all baked into that volatile price.
Okay, so that's the recent stuff, the sort of flashy product news versus the quarterly numbers. But product launches alone, they don't keep the lights on long term. We probably need to look deeper, right? Yeah. At the actual financial foundations from their 2024 annual report, the 10K. What did that tell us about the structural issues?
Exactly. Got to look under the hood. And when you shift to those fundamentals from the 10K, the challenges Snap faces in just achieving sustained financial growth, they become pretty undeniable. First off, revenue growth basically hit a wall in 2024. Total revenues were $4.608 billion. That sounds like a lot, but it was less than a 1% increase over 2023. Less than 1%.
Ouch. Basically flat year over year in a sector that's meant to be about growth. That's a big red flag.
It's a huge red flag. And then there's the profitability issue, or rather the lack of it. We know they've never posted a full year profit, ever.
Right. So what did the 2024 report show on that front? Still deep in the red.
Still deep in the red. The net loss for 2024 was $1.286 billion. Now, that was slightly better than the year before, but we're still talking over $1 billion lost in a single year. When your main competitors, like Meta, are posting billions in profit, well, it's just not a sustainable comparison. It feels like they're constantly trying to catch up.
Okay, so over $1 billion in losses again.
Yeah.
How does that impact their financial health day to day, their balance sheet? They had, what, about $3 billion in cash at the end of 24, $3.067 billion, something like that.
That's right.
But their total debt from those convertible notes was higher, wasn't it? Around $3.7 billion.
Yeah, $3.724 billion in total debt. So debt slightly outweighs cash.
Doesn't that fundamentally limit them? If you owe more than you have in ready cash, how do you invest aggressively in something like AR to try and beat Meta or TikTok? Are they just stuck?
That's a really sharp question. And yes, that debt load is absolutely a constraint. It limits their strategic options, no doubt. However, looking purely at short-term liquidity, they're okay for now. Their current assets, things they can convert to cash relatively quickly, were about $4.1 billion. And their current liabilities, what they owe soon, were much lower, around $1.3 billion. So they can cover their immediate bills. They aren't facing, an imminent cash crunch tomorrow.
Okay, so they can survive, but maybe not thrive or make those big strategic bets easily.
That's a good way to put it. They have breathing room, but they're financially constrained compared to the competition. And speaking of competition, this financial strain just gets amplified when you remember who they're up against. Meta with Instagram Reels, TikTok, even X Corp. It's a brutal space.
And you can see that pressure in the user numbers too, right? You mentioned DAUs were up in Q2 25, but what about the longer trend from the end of 2024?
Yeah, that's where the slowdown becomes really apparent. As of December 2024, their DAUs were 414 million, which sounds good, but it was only up 5% compared to December 2023. Just 5% user growth.
Only 5%. Compared to what they used to post and what some competitors are doing, that's a major slowdown.
It's a significant slowdown. It really highlights how that competitive pressure is impacting their main growth engine, which has always been adding more users.
Okay, so fundamental challenges are pretty clear. Let's switch gears slightly and look at how the market is actually trading this. The technical picture and the sentiment right now, say in September 2025. Yeah. Looking at the price action recently, the last 4 weeks or so, the shares have been bouncing around between roughly $7.80 and $9.35. Seems like there's some support, maybe buyers stepping in around that $7.50 to $8 level. But hitting resistance, sellers coming out up near $9.50 to $10.
That's the range, yeah. And when we look at the technical indicators underneath that price action, the picture is currently pretty bearish, unfortunately. The stock price is trading below its 50-day simple moving average, which is around $8.70. That's a negative short-term signal. But maybe more importantly, it's also well below the 200-day simple moving average, which is way up near $10.60.
And being below both usually signals a pretty persistent downtrend, right?
Exactly. It tells you this isn't just a short dip. It's been a multi-month downward trend, and the stock hasn't managed to break out of it yet.
And Snap's always been known as a volatile stock.
Yes.
What's the risk profile look like technically?
Still very high risk. It's got a high beta, definitely above 1.5. So for you listening, that means if the overall market, like the S&P 500, moves 1%, Snap tends to move 1.5% or even more up or down.
So bigger swings, bigger potential losses.
Amplified risk, yeah. It makes it more of a, knife catcher for traders rather than a stable investment. Plus, other momentum indicators, like the MACD, recently crossed below its signal line. That just adds weight to the current bearish momentum.
Okay, so the charts look weak. What about sentiment? Analyst ratings, insider activity, the overall consensus seems stuck at hold, which isn't exactly inspiring.
No, hold is pretty lukewarm, and worse, we've seen some recent downgrades that have likely weighed on the stock. Morgan Stanley, for instance, cut their rating to underweight just this September.
Oof, underweight is basically a sell rating from a big firm like that. Why?
They specifically pointed to those persistent issues we've been talking about. Concerns around user growth slowing down and ongoing monetization challenges. Basically the core fundamental problems.
And insider selling. Are the people inside the company buying or selling?
That's another negative signal, unfortunately. Looking at the recent Form 4 filings, there's been continued selling by senior management. That includes the CEO, Evan Spiegel.
Yeah, that never looks good, does it? When the top leadership, the people who supposedly know the most about the company's future, are consistently selling their shares.
It sends a pretty clear message, or at least that's how many investors interpret it. It suggests maybe even they don't think the stock price is a bargain right now, despite their belief in the product. It definitely doesn't build confidence.
So, tough fundamentals, weak technicals, negative sentiment signals. Okay, Looking ahead then, what are the key things investors should be watching over, say, the next 3 months? What could change this picture?
The next quarter is absolutely critical. It feels like a real test for Snap to see if they can finally turn a corner or if this current valuation funk continues. There are several key dates and events you'll want to track. The biggest one, obviously, is the Q3 2025 earnings report. That's expected around October 24th.
Right. All eyes on that.
All eyes. Everyone will be scrutinizing those numbers to see if that user growth we saw and the AR buzz can finally translate into better profitability or at least stronger cash flow after the disappointment in Q2.
And beyond their own earnings, what about market level events?
Yeah, we get insights into what the big money thinks too. November 17th has a major ETF rebalancing event. How Snap is weighted there matters. Then December 12th is the deadline for the big institutional investors, the hedge funds and mutual funds, to file their 13F forms, showing their holdings. That tells us if they're buying, selling, or holding Snap heading into 2026.
Okay, so we see if the big players are losing faith or maybe seeing an opportunity.
Exactly. And one more date. November 25th is when we often get reports on holiday advertising spend. That'll be a key signal for Snap's ad revenue durability during their most important season.
That makes sense. What about more speculative stuff? Rumors, potential surprises,
Yeah.
anything like that on the radar? Because those can move the stock short term too.
Well, there's been some pretty high-profile chatter recently, pure speculation, mind you, but suggesting Meta might look at some kind of strategic partnership or maybe even, an acquisition.
The M&A angle. Yeah, driven by Snap's progress in AR. Maybe Meta wants to buy that tech or partner up. Again, just rumor. But that kind of talk definitely fuels volatility.
It certainly can. We've also heard some, let's call it industry chatter about potential surprise launches, maybe new AI tools for advertisers, things aimed at smaller businesses globally to diversify their ad base.
Interesting. Anything on the legal side? That ad revenue lawsuit has been hanging over them.
There's some speculation there, too, that maybe Snap might try to settle that class action early. If they could resolve that, it would remove a significant headline risk that's definitely bothered analysts.
Okay, so some potential positive catalysts, even if speculative. But we have to circle back to the risks, right? What are the major dangers here for someone considering an investment?
Absolutely. The core risks haven't really changed, and they're significant. First, that heavy reliance on advertising revenue makes them incredibly sensitive to the economy. If ad budgets get cut in a slowdown, Snap gets hit hard. Second, platform dependence. They live and die by the rules set by Apple and Google on mobile. And third, just the sheer existential threat from bigger, much richer, better monetized competitors. TikTok isn't going anywhere. Meta keeps innovating on Reels. Those are fundamental structural issues.
Right, those aren't going away overnight.
Definitely not.
Okay, so we've covered recent performance, the financials, technicals, sentiment, catalysts, risks. Let's try to synthesize this. Time for the final verdict. Based on everything, is Snap a good time to buy now?
Pulling it all together, our analysis really aligns with that overall 4 out of 10 rating from the source material we reviewed. It's just not painting a pretty picture for investors right now. Yes, Snap has positives. A large user base, undeniable product innovation, especially in AR with spectacles, and, as we discussed, enough liquidity to keep the lights on in the short term. Those are the pros. But, and it's a big but, these are pretty clearly outweighed by the cons. The stalled revenue growth, the recurring billion-dollar net losses, the significant insider selling we talked about, and just the intense, relentless competitive pressure. The technical charts confirm the weakness, too.
So the final investment thesis summary seems pretty clear then. While Snap might offer some opportunities for, say, experienced traders playing volatility around earnings or maybe a product launch.
Short-term trading, perhaps.
Right, for short-term trades, maybe. But for long-term investment, it just doesn't look attractive given these persistent negative fundamentals and that slowing growth trajectory.
That's the bottom line from our analysis, yes. Not attractive for a long-term hold right now. And maybe this leaves you, the listener, with a final thought to chew on. Snap's AR innovation is genuinely exciting. It really is. But the crucial question isn't just can they innovate, it's how long can that dazzling light of innovation keep investor faith when it's constantly overshadowed by a decade of billion-dollar losses, especially when the competition has the resources to potentially copy their best ideas and scale them faster. That's the real race Snap is in.